Hello, everybody, and welcome to this special episode of Prinsights Global Spotlight, where I am so thrilled to welcome back to the spotlight Rick Rule, a legend, my friend, and founder of Rule Investment Media and longtime curator of the Rule Symposium, which is widely regarded as the premier resource investing conference in North America. It was amazing last year. This year's conference is upon us imminently, mid-year. And I am so excited about where commodities have gone since the last one and where they're going to go. But Rick, I'm going to turn it over to you and welcome you back. It was a huge year last year for real assets. What do you see coming this year?
Well, thank you, Nomi. And yes, in fact, the stuff that you and I began talking about 4 years ago came true. Now, in fairness, it came true in spades. I would be remiss in suggesting that 2026 was going to be as generous as 2025. It'll be a good year as opposed to a spectacular year. Make no mistake, Nomi, I believe that the next 10 years will be kind to the precious metals market because I believe that the next 10 years will be unkind to the purchasing power of the US dollar. I believe that the next 10 years will be kind to industrial commodities for all of the reasons that you've talked about in your own newsletter. Among them, the increasing utility in technological applications, the increase in the demographics of the poorest of the poor, but most importantly, Nomi, because we've underinvested in them for 30 years. Things like copper, which we can talk about later, have suffered from 30 years of neglect, and you can't cure 30 years of neglect in 5 years. You just can't do it. So, for reasons that you have already talked about for Prinsight subscribers, the next 10 years in the natural resources business, after perhaps a slow start, I think will be pretty spectacular. Just not as spectacular as the year that we've just been through.
Yeah. I mean, it was epic. There is no doubt. And one of the things that you've said over the years, at the symposium and in general is that the best thing that investors can do if they're either new to the space or steeply involved over time is to show up, to access information, to access individuals, to see where those trends are actually happening in the most acute ways. And you mentioned copper. I mean, it's one of those metals. Let's just dig into that. That certainly outperformed last year, not quite as much as silver, which was the number one commodity performer, just killed it last year. Platinum was neck and neck with silver till like the very last week, and then silver just sort of raced up ahead of platinum. But yeah, and those continue to be facing supply, structural issues, jurisdiction issues, and so forth. But talking about copper, which is kind of a bedrock and didn't quite perform as well last year, still performed. Where do you see, because of this supply situation and demand so quickly accumulating, the patterns of copper, the geographies where we should be looking at miners? How do you see copper?
I would argue that copper underperformed in 2025. Yes, the price did well, but if you look at the backdrop, we had an existing supply deficit, which is to say we used more copper than we produced. The balance came from recycling and from above ground stocks. In the face of an existing supply deficit, 7% of world copper supplies came offline. Grasberg came offline. Codelco, the biggest supplier in the world, had production shortfalls. Kakula came offline. Cobre Panama came offline. One would have expected a 7% decline in supply in the face of an existing production deficit to have generated a much stronger copper response. I'm no economist. I suspect you are. My suggestion would be that the global economy was softer than people think. Because at the same time that we saw relatively soft copper prices, we saw soft oil prices. And that suggests to me that in the current quarter, not looking further ahead, the demand is weaker than any of us thought it would be. I may be wrong. Looking further ahead in copper, I'm seldom able to speak in absolutes, but I can absolutely speak in absolutes. We have underinvested in copper exploration for 30 years. You can't turn that around in five. The other supply headwinds are one, social rents, which is to say government theft. That's increasing around the world. And that comes out of the copper producers' bottom line and ultimately their cost of capital. When taxes go up and when royalties go up, when offsite investment requirements go up, copper becomes um, more difficult to produce. The third thing, and it's related to the second, is permitting. Nomi, I think you're aware of resolution, but I suspect that your readers aren't. There's a wonderful copper deposit in the United States in the Central Valley of Arizona, which is one of the premier copper producing districts in the world. It's conveniently located between two copper mines. There's a highway goes across it, a railroad that goes across it, power goes across it. There's a town right next to it that's filled with something very useful, copper miners. And this deposits over 1 billion tons, 1.5% contained copper. That's 3 times the average mine grade worldwide. And we're 28 years and counting. 28 years and counting in permitting. That tells us, well, and one more fact, unrelated to resolution, but related to copper. And this number astonishes me. We heard from Wood Mackenzie in London that the copper industry itself says that they have to spend $250 billion over the next 10 years to maintain current production levels, although copper demand is slated to increase at 3% compounded for 25 years. What that suggests to us is that over 10 years, copper demand increases more than 30% because of compounding, at the same time that the industry has to spend $250 billion, $150 billion of which they don't have, to maintain current supplies. This is pretty easy for people who think in 3 or 4 or 10 year timeframes, which I do. Uh, does this mean that we're going to have joy in 2026? I don't know. 2027? I think so, but I don't know. Between now and 2030, I mean, frankly, as much joy as you can handle.
Yeah, it's obviously when we talk about how long, you mentioned 28 years waiting for permits. I mean, these are insane numbers, because this is like honestly paper pushing relative to the physicality of extraction, of refining, of production, and transportation. It should not take that long. We have had a couple of executive orders last year pass, and I think there's more on the horizon to accelerate, particularly in the United States, some of these projects. But it's insane if you look at it. And because you mentioned Arizona, and we do have a miner in our portfolio in Arizona right now, because of that, because we're anticipating the joy that we will all have, if it's not completely this year or next year, within the next several years. But also, we've seen a lot more exploration in the United States in general, in gold in particular, a little bit in silver. You mentioned copper, which seems to me, and you have a longer perspective on this, sort of a new wave of old mines that are reopening and re-permitting to feed into the supply dearth of gold, silver, and especially copper that we see on the horizon. And because we've been so woefully behind in doing that in this country, do you see any of those patterns
Yeah,
develop?
absolutely. The fact is that we have continued to some degree to explore for gold in the U.S. And we found so much gold in the decade of the 80s that we need to find less. We needed to do less work. We got to pick it up in copper. And I will be interested, and in fact, I'll lean on you at my conference to talk about domestic politics in the U.S., which is not my strong suit, and how it relates to extractive industries. I think one of the real insights that you've always brought is that I have a good Main Street perspective, maybe a good Wall Street perspective, but I certainly don't have a good K Street perspective, which you in fact do. Um, I do have a longtime friend in the BLM who I won't name because I don't want to damage his reputation, his career prospects, but he's been a friend a long time. And about 6 months ago, he emailed me and said, Rick, get the lead out. For 15 years, the message from on high, from our bosses, was to slow stuff down. Now the message is to get stuff done. Now, there's a long time between what he allows me to do, which is to say front end exploration and building a mine. But this is really the first time in the United States since the decade of the 1980s when there was executive direction from on high to address domestic supply bottlenecks. I haven't seen that in my own investing activities, know me for 30 years. You'll pardon me for being a little cautious. I know that the winds can change, but it's lovely. Perpetua, which just got financed. We've been trying to finance Perpetua for 13 years. I've been involved with those deposits for 30 years. Um, uh, it's an interesting circumstance. Interesting even more in that while the administration spent 15 years opposing us, now they've decided to subsidize us. I need to say, Nomi, I felt cleaner when I was vilified than I do now that I'm being subsidized. But I certainly understand from an investment perspective that this is a more attractive circumstance.
Yeah, and you mentioned Perpetua, of course, as a sort of multi-asset, multi-commodity a project. I think that a separate conversation we can have and explore it at the World Symposium in July 2026 in Boca. But there are more of these sightings and sort of project focuses in the White House and that we've seen, as you say, and I expect that to continue because we are so woefully behind the world in terms of where we used to be and where we are
Uh,
now, which
you
I guess
know,
is the definition of being behind. So
Another discussion I want to have is and you, I want to have it with you because I observe it from the outside. The fact that the United States seemed to have decided that they are going to resume the foreign policy of the U.S. in the 50s and 60s, which is to say, use our economic might and our political will to strengthen our access to global supply chains. Everything that the Chinese did in the 90s and the decade of the 2000s, they took from our playbook. They moved into a vacuum. I remember growing up in resource businesses in the 70s when the U.S. State Department was a real ally. The U.S. State Department would tell you how to license and what to do in various foreign countries as opposed to shut you down, which is exactly what the Chinese did. Now, as an example, in a company that you and I share a fondness for, Meteoric Resources, it would appear that in terms of perhaps processing, perhaps even offtake or construction finance, that the United States is prepared to work in other countries, work in Congo, work in Brazil. It would appear, as of a couple of weeks ago, that they're preparing to work in Venezuela. These are all interesting things. And I, frankly, rather than teach, I'm going to lean on you to learn about that fact.
yeah, I mean, honestly, it's fascinating, and again, I'm speaking to you to learn from you at this second. I always learn so much from you, and I do see this world changing very rapidly, as you are noting, in terms of what the U.S. is doing from a policy perspective, where it's doing it, and the fact that it needs to make up a lot of ground relative to China, and that's happening. So I think we're going to continue to see that. And before I let you go, because I know that you are extremely busy, I look forward to seeing you in person soon. I just want to quickly touch on uranium and nuclear. We spent a lot of time on that topic last year. Uranium prices dipped in the beginning of the year, kind of skated around for a minute. They're back up, not to their highs, but in the low 80s, which is where utilities contracted them. Utilities are starting to contract forward. We've got enrichment issues, we've got supply issues. So That's my second to last question. And then I'll ask you a last question. Where do you see uranium?
Slow and steady for a very long time. The movement of the market, in particular from the spot market to the term market, has profound implications, which you and I have talked about. The most important of which is predictability. In uranium, unlike any other commodity that I know on the planet, producers and consumers can enter into 10-year, 20-year, 30-year contracts that specify price and volume. When I, as a lender or a securities analyst, try and model a copper company, uh, the copper price is at best for me a guess. But in the uranium business, with the right contract, all the guesswork is gone. There's huge certainty. That means that debt capital is available because of certainty at a lower cost. In a capital intensive business, cost of capital is all important. And again, we've gone from a circumstance, Nomi, where 5 years ago, as a uranium adherent, I sort of expected to see a picture of myself in the post office wall, with a reward tag on top.
Right.
And now the same people who wanted to put me in prison want to subsidize me.
That's right.
The recent announcement between Cameco, by the way, easily the best uranium producer in the world, and their joint venture partner Brookfield and the U.S. government around the construction and operation of 10 nuclear power plants in the United States, each of which would consume an average of 1 million pounds of uranium a year, is of profound importance to the uranium industry and, frankly, of profound importance to the United States. Reliable, cheap, clean, baseload power. And also the sea change in attitude that it represents. Mr. Trump is, among other things, not a bad gauge of some aspects of public opinion. I don't think that he would float a trial balloon among all the other balloons that he's floated if he thought it was going to sink and explode immediately. And the fact that there's political cover, even even for somebody like Trump, who cares maybe less about cover than some of his predecessors,
Okay.
says an important thing about U.S. culture.
Yeah, it sees us investing in, like you said, baseload energy. That's just a requirement for culture and growth. All businesses, right? No, I appreciate that perspective. That was an $80 billion check, effectively. I mean, over time, over subsidies, but not small. That was a big investment in future nuclear and uranium processing. So
You don't
exciting
know
time.
me. Another thing I think that's important for Americans to understand is that American technology in nuclear is no longer the best in the world because we haven't built plants for 30 years. But the United States still has the best intersection of various technological disciplines. And the idea that American nuclear power plant design won't increase once we start building some again is absolutely wrong. People say, well, there haven't been, improvements in nuclear technology. It's because we haven't built plants. you know, in any activity that we do a lot of, not just the United States, but the world gets better. And nuclear power is going to get more efficient. It's going to get cleaner. It's going to be cheaper. Um, Wonderful circumstance. Now, what could go wrong? Easy, easy. A 3 Mile Island, a Fukushima, a nuclear disaster would set this whole thing back 30 years. But with the improvements in technology, the probability of a disaster, particularly if those plants don't get built in the former Soviet Union, uh, the probability of that's lower.
Yeah, definitely. Um, So just as we close up here, again, thank you for your time, for everything that you do for this space, and for sharing your wisdom and your insights and your experiences. And before we wrap up, can you leave us, our listeners, our viewers here at Prinsights Global, 3 points of current wisdom that you have in terms of how investors can position themselves best for 2026 and where they can find information. And we'll put up links here as well to get to the 2026 World Symposium.
Always understand that the easy money is made in a sector that's hated. When you proceed from hate to tolerance, hate to acceptance, the easy money is off the table. And so the easy money in silver, as an example, has been made. I, in fact, have sold my physical silver. It fulfilled the role that I had set out for it 5 years ago. I kept my silver stocks where I believe I have definable competitive advantage and where I think there's double the torque. But I've sold my silver. The easy money has been made. So look to hate first. There's not much hate in the market. Understand, as a precious metals investor, that the deterioration of the purchasing power of the US dollar, which I believe is inevitable, uh, inevitably results in a stronger nominal gold and silver price. And I think that trend is in motion for a long time. Understand, too, that our society is underinvested in the stuff of humankind. We've underinvested in copper, we've underinvested in oil and gas, and the chickens are going to come home to roost no matter what we do. Oil has the added advantage of still being hated. I think it's ahead of itself right now because people are trading the news in Iran, people are trading the news in Venezuela. This turmoil has nothing in the near term to do with supply and demand, but oil is still hated. And if you see a retreat in the crude price from 60 to 50, you're going to see the type of opportunities that existed less than 3 weeks ago or 4 weeks ago in the best of the best names, the Exxon Mobils, the Schlumbergers, never mind in the penny dreadfuls. And I think, given the fact that we're going to be in, I believe, 10-year long bull markets in both precious metals and industrial materials, that over time the market leadership will change from the beta, which is what you and I have talked about for the last 3 years, to the higher quality juniors. And I think there will be greater risks there. There'll be much greater volatility, but there's going to be a lot of money to be made.
Yeah. Yeah, I could not agree more with that. The juniors are definitely an exciting place. Some of them started to catch up. Some have outperformed the seniors and the commodities, and there are so many that you're involved with and that you continue to explore that are out there waiting for investment from this sort of retail community. So it'll be fun, and I think that's a really that's a great tip or a great point of insight for us here. So how can we find information about the conference and other work that you are doing?
Bunch of ways. The easiest place to get in touch with me is to go to my website, ruralinvestmentmedia.com, and I'll make it worth your while. If you come to my website and you list your natural resource stocks, I will, for free, rank them 1 to 10. Understand the rankings are snapshots in time. A new piece of news changes the ranking tomorrow, and I don't notify you, but it's useful for today. If you want to learn how to do your own rankings, go to the Rural Classroom. 16,000 students enjoy over 300 hours of instructional programming. Again, absolutely free. Free is a really good price, Nomi.
It is.
The best work I do, though, is at the Rural Symposium, and that's not free. July 6th through 10 in Boca Raton, Florida. You can attest, Nomi, it's a wonderful facility. It's also the best natural resources investment conference on the planet. Whether you attend live in Boca Raton, which would be my preference, going on a boat cruise with Nomi and plying her with her favorite beverage so that she's more forthcoming than she otherwise would be with information, is a wonderful benefit. But if you can't come, live stream, we will broadcast to over 2,000 people in 30 countries into the comfort and convenience of their own home. So, however you choose to attend, please do. Remember that this comes with a full money back guarantee. If you think for any reason that I didn't deliver you your money's worth, whether you attend live or live stream, just tell me. I'll give you your money back. Last year, out of over 2,000 total attendees, I think we had 5 refund requests, which will tell you how well we met our customer expectations.
Yeah, I mean, it was a fantastic conference. They get better and better every year. And everyone who is watching here today, seriously sign up, be there. If you can't, make sure that you sign up for the online version because you need to do this and you need to do this year. It is invaluable information and valuable connections. Rick, you are invaluable to me and to my continued exploration of the commodity space. So I thank you personally for that. I look forward to seeing you soon. And thank you for joining us here at Prinsights Global.
Thank you, Nomi, and the feeling's mutual. You're my favorite attendee exhibitor of my conference. It's not like you parachute in and give your speech and go hang out by the pool. You talk to the attendees, you go booth to booth. Hell, you became a director of one. Now, this is participation.
No, thank you for that. I've yet to actually see the pool, but that's because of but the boats definitely, the cruises are amazing. So thank you for that. And everybody, thank you so much for joining us here today on Prinsights Global Spotlight.